The current crypto market is incredibly bearish. We are in an environment of extreme fear right now. Hey, what's up, guys? I'm Cody the Coin Raptor, and in today's video, I want to talk about the reason why I am bullish in the long term. I like to kind of juxtaposition things and set myself here apart from other people, and especially those on social media, crypto, Twitter, and the like, talking about us being in an absolutely bearish environment, total complete collapse, FUD everywhere. And so I want to go ahead and give my take on why I'm going to go ahead and give the opposite view and the opposite opinion here. So what we have here is the Bitcoin and crypto fear and greed index. We're at a 20 right now. We're in extreme fear right now, and I think that's fairly warranted given the fact that over the past couple of days, we've seen a couple of banks fail, including Silvergate, which was a crypto-focused bank. Now, the Bitcoin price has come down pretty dramatically now. What we're seeing here is it came all the way down to about 19,600. It seems to have found some support here, but Bitcoin right now is kind of in the middle of a very strong support band. And this support band stretches from about 20,000 all the way down here to about 18,000. We'll call it 18 to 20,000. This whole support band goes all the way back to June and the June capitulation, and then basically what it amounts to is going sideways for a good chunk of the year, with a little bit of times in which it pumped up and it actually broke down a little bit. But this seems more like a just sort of a reversion back to the mean. And the mean right now is this box here, this box of support, and I do expect that this box of support will hold. We'll wind up getting, at the very least, some very strong support down here at 18,000. This support level so far has proven to be incredibly durable, and the only time that Bitcoin has slipped under this level was during an absolute massive black swan event. That was a complete and total collapse of FTX. Now, what I'm expecting going forward here is we're probably going to wind up getting some sideways chop. We might even get a little bit more of a breakdown, but in the intermediate term, what we're going to wind up seeing is it's going to find support down here, it's going to gather support, and then it's going to move back up again. So I think that's probably the most likely outcome. We could wind up getting a couple of crazy-looking candles. We could have just a little bit down here. We could have a little bit of sideways action, a little bit up, down, up, down, up, down. And then what we're going to wind up probably seeing is a move more to the upside and a retest of this 22,500 position, and maybe even below, maybe and above that, about 24,000 or so. And partially, one of the reasons why I think this is going to be the case, if you take a look at the relative strength index, this is something I've been paying attention to quite a bit, but the daily right now has hit 28, and this collapse is almost on par with what we saw with the liquidation at FTX, and we're probably going to wind up seeing an equal and opposite reaction to at least somewhere in the upside here, probably about 22,000. We're going to see a number of shorts wind up covering as soon as we see a larger move to the upside. So that brings up another fantastic point, and that is we go ahead and take a look at the Bitcoin funding rate. We can see here, based on the funding rate, that shorts right now are dominant and they are in control of the market. Right now, it's hit a level, a negative funding rate that we haven't seen this year. In fact, if we just zoom out, we can't actually see a time. We have to actually go to the daily, and we can see a time where the funding rate was this negative. Actually, it goes all the way back here to about, again, the FTX collapse back in November. So what I'm seeing here is a very, very strong number of shorts and short positions gathering. And if we see any movement up to the upside whatsoever, we are going to see a pretty sizable short squeeze. So that's another reason why I think that we're actually going to wind up moving up from here. Now, I also want to go ahead and take a look at the demand for Bitcoin, okay? And one of the measurements that I use for demand for Bitcoin is the network hash rate. So this gives us an idea of the total hash rate on the blockchain. Right now, it's actually near all-time highs, and this actually hasn't changed that much in the past couple of days as we've had that Silvergate collapse and a bunch of FUD go through. and we've seen it still remain very elevated. So it's still on this nice upward trend here. And if we look out and we can see here, based on what it did back in November, it actually went up in November, even though we had that mass liquidation for FTX. But seeing the hash rate moving up, that shows us that the miners, Bitcoin miners, are having a higher level of demand. They're bringing more miners online in order to mine Bitcoin. So that's definitely a strong indicator of demand. If demand was really that weak, we would see a total and complete collapse of the hash rate, much like what you saw here in April and May in 2021 when the Chinese banned Bitcoin mining, or even back in 2020, in this little collapse here, you can see this is the 2020 bear market, a huge move down in the hash rate, and that is not something we've seen so far. Another thing I want to point out when we talk about our demand is the number of Bitcoin active addresses. So this is on CryptoQuant, number of active addresses, the total number of unique active addresses, including inclusive of senders and receivers. What we're seeing here is actually it's at a level currently that matches what we saw back in November, which is definitely a positive sign. That's after the recovery in November, and then it actually comes all the way back here to this May level, and then even before that, back in October of 2021, we were seeing a similar number of active addresses. And so whenever this spikes, you tend to see more demand, more activity on the Bitcoin blockchain, and it's remained at a relatively stable rate despite the fact that we saw a mass liquidation event happening earlier this week. Also, if we take a look at the Bitcoin fees, we can see that fees have spiked dramatically as well. And so fees, basically what that tells us is the activity on the blockchain. It's the fees paid to the coin miners, and that's actually spiked quite a bit. So that kind of helps out miners a little bit and gives them more revenue just because they have higher fees taken from the transactions. And so the last thing I want to talk about is the broader macro picture. So I recently saw this article here on Yahoo Finance. It was entitled, The Fed Rate Cuts in 2023 Price Back in as Bank Worries Escalate. And so what we have here right now is the total macro picture as we think about those banks collapsing. And they say, as recently as Wednesday, a point rate hike this month was viewed as likelier than a quarter-point move, and a rate cut later this year was counted out. But with rising borrowing costs subsequently taking the blame for this year's first bank failure, pricing of swaps linked to Fed meetings shifted Friday to levels suggesting the central bank's policy rate will peak at around 5.3% in June and end this year below 5%. Okay? So that's very interesting. And so what that's saying is that the derivatives market right now is pricing in the possibility of the Fed bringing down interest rates at some point this year. And I do think that's actually very bullish for Bitcoin. And if we actually go ahead and take a look at the Fed funds rate and Bitcoin, what we can see here is that during periods of rising Fed funds rate, Bitcoin tends to go down. And during periods of lowering Fed funds rate, Bitcoin tends to go back up again. So what we're seeing here right now is the fact that Bitcoin tends to move opposite of the Federal Reserve and the Fed funds rate. So as soon as they start bringing that back down again, that should be a net positive on the Bitcoin price. Okay, so that's yet another reason why I am bullish, especially in the longer term. And I am definitely considering adding to my position right now. I have not bought since the last video, but I am looking at prices, and especially if I can get these prices below 20K, that's what I'm looking at, and especially below, let's say about 19.5, that's also what I'm looking at as well. All right, so let me know what you guys think. Do you guys think the Fed's going to wind up cutting rates before the end of the year? And do you think that we're going to wind up getting some more crypto contagion through adjacent businesses? I'm definitely interested in hearing about it. If you guys like this video, be sure to like, share, and subscribe. I greatly appreciate that. And leave a comment below with what you guys think is going to wind up happening to Bitcoin. This is Cody the Coin Raptor, and I hope to catch you guys in the next video.